Welcome to Trading Lounge and the Commodity Futures report for Tuesday the 4th of January, starting with gold here on this 2-day chart. We're looking at the Elliott Wave triangle. I'm pleased to see that we're sort of nearly at the end of this triangle. It's taken us like over a year to get through this damn thing. So where are we? Okay, so stop complaining, Pete. So an A wave, a B wave, a C wave, a D wave, and an E wave here. So we're looking for the A, B, and C here. It's still okay if you've got the A wave over here or here. It counts okay. The B wave has really confirmed itself being in there at that point. We can see on the stochastics that we're ready to turn at this point here. There will probably be a bounce off that 1800. We'll just check on that. So this is one way of counting it with the A wave here, an A and a B, and we're looking for 5 waves up. We've got 5 waves, but they're pretty butt ugly as 1, 2, 3, 4, 5 here. So probably better counting off an A and a B and a C for the A wave, a B wave and a C wave here for that. But either way is okay. But what I wanted to point out was also on the 4-hour we can see that we're ready to do a little bit of a bounce there, but it might be a bit of a dead cat bounce, so just be mindful of that. We'll move in and have a closer look at that. I mean, just looking at it visually here, it looks like we've got a little wave 4 to rally here and a wave 5 and then another little move up here and then down here. But I think that in one way or another, just visually looking at it, once you can see that the 1800 here is become the resistance at this point, then I think it's a good opportunity to hedge at this point. Now, try to go fully hedged if you can, if you've got long positions in the market over all of this, because we'll be expecting a move down to the 1720. Now, it could go a bit lower than that. It's always a bit of a guessing game. All we can do is count 5 waves from B to C here. But there is a bigger picture of a bearish pattern that's sort of also looming as well. So, but at the same time, I'm sort of considering, let me just check. Not that it's the end of the world here. This is just GDX, by the way, and you can also see that that's in a corrective pattern, so that's probably going to come lower as well. But I wanted to have a look at the dollar index. So with the dollar index here, probably have to reshuffle this about. Not looking for 2 more waves up, actually. I have to redo this a little bit, but in a nutshell, we're looking for at least 1 more move to the upside at minimum. And as this comes down here, well, then we'll see the commodities push up at that point. Okay, that's just the daily chart for the dollar index at that point. I just need to count this a little bit differently, but that's okay. Yeah, so this is corrective, so we need that push up there. So the US dollar is going to go higher. The opposite other pairs will be going lower, yada yada yada. So yeah, as long as you aware of that. So just coming back here, let's just cruise in here a little bit further on this one. The hourly chart here, this is the other way on our website, the way that we've counted it. I just wanted to have a look in. It looks like we've got 1 and 2 here and 3 here and 4, so I think that we're on the right track. We'll see sort of 5 come into play here, just very small, and then an ABC trying to get up here. How high it'll go, I'm not quite sure, but something of this nature will be, I'll just sort of draw it out a little bit here roughly. It'll be something like this here, you know. So once it sort of locks in here, so yeah, hedging that up wouldn't be such a bad idea. And so that's that really. Coming down to 1720 area, could come lower, so that's why you need to lock it up if you're got long positions in gold. This is the time to look after those positions. Okay, so crude oil is next. I forgot to look at that. It's my first day back, and I haven't done everything. So okay, so Let's just clean this up here. I haven't done all the intraday work on this. I just completely forgot. But it looks like we've got 1, 2, 3, 4, 5. And it looks like the extension's in wave 1 here. So 2 here, 3 here, 4 here. So probably one more little move up through here. I'll look at this again tomorrow in a bit more detail. But it should work itself lower at that point. So we're just going to go a bit higher there to get that in there for that. I'll check on that a little bit later. So copper is next. So let's have a look at, we've been looking at the US spot copper, haven't we? So this is copper here. Now, what I wanted to say here, first of all of this pattern across here from wave 3 to 4 here is corrective. Now, it could be that we've got a WXY in place here and we're finished here. Now, if that's the case, I can't quite count 5 waves up here just yet. If, however, let's just say that we get a move up through here, then it's likely that we can go in for a long trade at that point. If we get this 4,500 here, 45,000, this is a CFD product, so it's just labeled that way, but the 45 there as the support, then we can go long. Then we'll be done and dusted at that point, because that's the 50-60% retracement level. Yeah, I mean, it could play out a little bit more complicated than that. We could actually, when I think about it, actually get an A and a B and a C up here, and then come down for an A and a B and a C here. So a little bit more to go, possibly, if we're going to go into the triangle case of the A, B, C, D and E here. So that's, I suppose we need to put it in there. So the C wave, the D wave, still playing out here. Anyway, we'll just keep working on it. But the good news about this, though, is that copper's not going down. It won't drop below 40 there. It may spike down there on the E wave or something, but this is a corrective pattern, so we'll be going up in due course. But I'll put a bit more work into this. I just want to see how this leg pans out here, and then that will give us a little bit more info on that. But yeah, nothing really to see or do there. Natural gas is just working its way lower. Let's just check on that. Let me find it in my list. There it is. So yeah, we're looking at an impulse wave to the downside. This box here is the 50-60% retracement level at this point. I did go back over this here, and you know, I looked at it as an A and a B and a C wave up here. But then over the Christmas break, I did take a closer look at it. And it's a little bit dodgy, but I just wanted to share it with you. It could be true, because this little move here going up here is in 5 waves. Yes, there's overlapping wave structures of 1, 2, 3, 4, 5 here, but then we've got this A, B, and C here for this. So and we've made a new low here as well, rather than this one. But I wouldn't pin too much on that. The structure itself, we could look at it as wave 1 and 2 here. That would leave us with wave 5 up here, and that means that we can go higher at that point, but it would mean that I'll need to redo all of this. So it's possible that we could have a low in place, but yeah, I just need to get my head around it again, and whatever happens to go long, we would definitely have to have the medium level here 4 as the support, okay? And would need the right structure there. So we'll keep an eye on this. It's possible that we could sort of work a trade to the upside. But anyway, we'll just leave it with me for a little bit. It's got to tune back into it. But I did look at it, and there was a little bit of hope in it all. All is not lost for gas. You know, I mean, all these trends and corrections, they're just like the pendulum swinging, you know. So yeah. Right, nickel. Okay, well, I did bring nickel into this chart here. Let me just find it. So this is nickel here. But we'll just go back to our, we can just work, no, I'll go back to the old chart that we're looking at here for a moment. So one of the things that we were looking at before was that we had this little green line here, right? We had it up here, then we had it here, then we had it here, and then we had it here. So it's possible that you might be long from here, and that's kind of okay in a way as well. So let's just see how this plays out. But this 16, this is nickel 2. I don't understand the nickel that much. I do know that a lot of the nickel comes from the little island New Caledonia outside, about 1,200 kilometres off the Australian coast, and they've just had a referendum there. If they would still like, if they would like independence, and if they wanted independence from France, and 90% of them voted that they wanted to stay with France because they were concerned about the Chinese moving in there, because the Chinese are starting to in that Pacific region there, they're starting to flank Australia, you know. So it was fantastic that nickel has, you know, it's one of the largest nickel deposits. So that's been saved from the Chinese. Nothing that I've got, you know, I like the Chinese people. I'm just a little bit concerned about Xi Jinping dominating everything, you know. So it's good that New Caledonia was saved, and the nickel was saved as well, and so it was a big win for the French for the French people. So look, it's possible that this could just continue to cruise up from here with this little wave 1 and 2 here, and continue to move up. So I think we'll just work. This is nickel 2 here. So the nickel that I've got here, I think is nickel 1. So it's at a different price point. So I don't, if anybody's got any sort of insight on all of that, well, then that would be appreciated. Now I've gone over this here and I've tried to count. Now it's a little bit dodgy in the count, where I've got 1 and 2 and 3 and 4 here, and then up for 5 here for wave 1, because wave 4 overlaps wave 1 here, but then wave 2 pulls back quite deeply here. So a little bit of a sort of, anyway, we just, you know, anyway, that's the weak spot in the count. And yeah, so you know, we could count the whole thing up as corrective as well. One of the good things though is that it does appear that this is impulsive to this point, and we can look at this as 1 and 2, and there's 5 waves in here that we counted in the last chart, with 1 and 2, and possibly 1 and 2 here. So it's kind of displaying quite a good bullish thing. So it spiked up here before, as it's doing now. So when it first got here, when you think about, if you think about it as live and living, it, you know, it was bobbing along and tried to get up there, hit a brick wall and bounce back, and then it's had another go at it, and then has, you know, is spiking up, and it's been pushed back down and pushed back down, and so, but as soon as it finds support here, then I don't see any, you know, it needs to come back and retest it. So we want that first high above the level to get in place there. And it would be nice if we could look for a little 5 wave structure up here that I don't think is quite finished. So we'll probably get another little high to come in here, and then we'll get our little ABC pattern coming back in here. And then if that's the case, then we can go long here. Well, if we get 5 waves here, we can buy on 20, we can buy on 21, 22 and 23 and build in, and we'll be going up to the medium level and beyond at that point. I mean, obviously nickel's really important because it's used in batteries and yada, it's a bit like copper. It's also moving into the new green, well, high-tech world, you know, so it's useful. It's still in the 5-cent piece as well. Even though it's in the 5-cent piece, the government loses money of it being in there, but they still put it in, so good on them. Yeah, I won't go into the intraday just yet, but yeah, just having a little discussion about it, and I'm changing over to this chart, but I don't know if that's right or wrong. So yeah, anyway, any feedback or anybody got any knowledge about all of that, it'll be good. Yeah, so what's next? Well, the dollar index, which we just looked at, so that's let's come back and have a little look at that, I guess, to finish off here. DXY, yeah, as I just mentioned earlier. So we're still, this has been quite laborious here. We need to put this over here. In fact, that one doesn't go over there. It will be this one that goes over there, and I'll need to rearrange things so this goes over there, and then we're looking for one more high up here. That's what basically we're looking for in there. So anyway, I'll do some more work on that and get back to you on that. I think the US Treasury, the 10-year yields are the same as well. We've got another push to the upside. So yeah, we'll leave it all at that. So yeah, okay, well, that's it. It's our first video back for the new year. Bit of work to do on things like nickel, and we're expecting gold to move down, but you know, when gold does move down, I also wanted to have a look at Newcrest Mining. Now, obviously, I know that this doesn't apply to everybody, except us sort of Aussies. But what I was sort of thinking about here is that, sure, we could drop down here. We could go 1 and 2 and 3 and 4 and 5 here. If this finds support on the 25, and we get a classic trading levels pattern in here, some sort of thing here, well, then we'll call the long trade in at that point. Okay, so we have to wait for that. I've still got positions in here as well, so we'll look to add to this on the way up. So yeah, this is the line at the $25 is the line in the sand, and yeah, we'll see how we go. Keep an eye on that. Alrighty, thanks for tuning in. Cheers.